Welcome back to the channel, everyone. Today I'm going to talk about whether you should buy Bitcoin at its new all-time high of 66k per coin. And I've also got a big surprise for AMC as well. So stay tuned and let's make some money. But before I dive into the video, if you haven't already, be sure to sign up with Moomoo. Not only can you get a free stock worth up to $350, but you can also get a second free stock with a guaranteed value of $57 on top of that. Moomoo has free real-time level 2 market data. They also have advanced charting tools and 24/7 real-time up-to-date financial news so that you don't miss any important announcements. Linked in the description below. And now I want to dive straight in with the key information. So, Thiel says Bitcoin at $60,000 a coin is a sure sign the decrepit political system is about to implode. Thiel reportedly said that Bitcoin's price underscored his view that US politics is unsustainable. Thiel said the US political system is not sustainable, and the skyrocketing price of the decentralized cryptocurrency Bitcoin underscores that point. He said, "I don't know whether you should put all of your money into Bitcoin at $60,000 a coin right now. But surely the fact that it's $60,000 is an extremely hopeful sign. It's the canary in the coal mine. It's the most honest market we have in the country, and it's telling us that this decrepit regime is about to blow up." And this was just before Bitcoin broke the previous all-time high around $64,000, $65,000, just as the ProShares Bitcoin Strategy ETF was released, which, by the way, if you didn't already know, is the first Bitcoin futures exchange-traded fund. So I guess the big question is, should you buy Bitcoin right now at $66,000, $67,000 per coin? Well, I think this Reddit post explains it perfectly. Bitcoin is an emerging technology, network, and asset class that is only 13 years old. It is growing across all metrics at a rate faster than the internet itself back in the 90s. The amount of capital and brain power pouring into all facets of Bitcoin, as in the tech, the assets, the network, and also the related fields like NFTs and many more, is unprecedented. People accumulated massive amounts of capital over the years because of Bitcoin, and they're now deploying that capital to make Bitcoin even more secure, even easier to use, even easier to access, and even easier to integrate. And the amount of people who accumulated that massive amount of capital is also increasing rapidly, creating that positive feedback loop. Bitcoin at a $1 trillion market capitalization is still too small in financial markets today, but that is changing rapidly. The total addressable market for Bitcoin's use case is at least $10 trillion, or equal to the market capitalization of gold being a store in value. And then that use case market cap will increase by an order of magnitude once Bitcoin eats into bonds, real estate, art, and just basically every other store of value as well. Bitcoin has no rulers, only rules. It has no central points of failure and has time as its ally. Every single block produced by the network gives new information to the market and ossifies Bitcoin's position as a long-term store of value that is free from human interference and political manipulation. And this is exactly what Thiel is getting at in that previous article, because he said that US politics is so unsustainable because there's so much manipulation that goes on in the stock market. The demand for such a monetary network, asset, and technology is increasing exponentially as people see no end to fiat debasement. Bitcoin is here to stay, and it's not going away. Holding Bitcoin was once a risky proposition. Today, not holding Bitcoin is the riskier proposition. Now also, AMC's CEO, Aron, has a massive surprise waiting for his investors, but he hasn't yet said what it is, although he did hint at it. AMC's shareholder base, largely consisting of individual investors, is evidence of the democratization of Wall Street, according to CEO Aron, who also just confirmed today that there is still over 4 million individual shareholders of AMC. It's the individual investor who now owns AMC, and I work for them, Aron said on Tuesday on CNBC's Power Lunch. Investors should not be paying attention to what AMC Entertainment was as a business in the past. Rather, they should be looking to the future. You don't drive a car by looking out of the rear view mirror. You drive a car by looking through the windshield and looking forward. Aron said, "We have absolutely no intention of just bringing back the company that existed back in 2019. He told CNBC he plans to use the money to transform AMC and noted that the company has several big ideas. And he said, I think we're just weeks away from announcing a new business line for our company that is not running movie theatres as you traditionally know them. This could be to do with the ongoing negotiations with Gamestop's Ryan Cohen. Maybe they're going to form some kind of partnership and allow you to play games inside movie theatres. I think this would make sense and is their next logical step after now showing major sports like professional football in their theatres as well. Now I also wanted to talk about the ongoing petition that's going around for AMC, but first I wanted to give a little bit more detail behind the petition. Obviously you know that Citadel is taking the SEC to court on the 25th of October. But one of the main points they're going to try and fight is that the reason they're doing so is to protect millions of retail investors, which is obviously rubbish. Citadel Securities, the well-known market maker in the Robinhood Gamestop drama, is heading towards a collision with the SEC on October 25th. Both parties have a court date to settle a dispute over changes the SEC has introduced surrounding high-frequency trading and delimit orders. As we've previously covered, the pathway between an executed and a settled trade can be treacherous. That's why the SEC allows fast agents like Computershare to bring in extra reliability. As a market maker, Citadel Securities plays a key role between traders and brokers. Seamless with liquidity providers, market makers ensure that assets can be exchanged without much friction or delay. In practice, that means Citadel Securities receives orders and sells them for a bit more or a lot more than it's willing to buy them for. The delimit order interferes with that business model. A delimit order could be a displayed or non-displayed limit order that upon entry and when posting to the IEX's order book is priced to be equal and ranked at the order's limit price. Simply put, if the price of an asset changes unfavourably after traders give out the order, constituting latency, the delimit order would protect them from that shift. So basically, instead of placing an order when the price is $35 and you get filled at $36 or $37, it effectively caps the limit in which you'll be filled at. Market makers engage in high-frequency trading commonly, buying and selling orders instantaneously, preventing other market parties from adjusting their orders. So the high-frequency traders always get the price they pay, but obviously we rarely get the price we pay. In short, the delimit order is an AI algorithm that prevents arbitrage players like Citadel Securities from picking off lit orders. A lit order is an ask or bid order held in the processing system until the specific price is triggered or touched. Because they're no longer available to be plucked indiscriminately, the delimit order widens the competitive space between market makers. Obviously, Citadel are going to argue that this is bad for retail investors, and they're also probably going to include something about how payment for order flow is really good for retail investors as well. They'll probably try and say something like, with the delimit orders, it will reduce efficiency in the markets and make trades more difficult to execute, which is rubbish really. They're just trying to protect their own profit margins. Now obviously, because we know that the Citadel are trying to argue that delimit orders are bad and that payment for order flow is good, and that's supposedly supported by retail investors, therefore we need to sign the petition to show that we don't want payment for order flow and that we do want delimit orders. This petition is on the normal change.org petition website, and therefore you obviously don't need to enter any weird or wacky personal details or credit card details. As always, I'll leave the link to this post down in the description below. In yesterday's video, I kind of detailed why the SEC might not necessarily have been able to go into the detail that they wanted to in the GameStop report and expose the things they know to be true, but I think this Reddit post does a really good job of summarising it. The SEC report was never going to be what we wanted it to be, but that doesn't mean the filings we're waiting on aren't going to probably speed up the mother of all short squeezes. At the end of the day, Gary Gensler isn't on our side, but he's also not necessarily on the side of the short hedge funds. He's on the side of the big money like the rest of our government. The real big money who don't want the economy to collapse because of a short squeeze or for any other reason it could be at any time. Everything we've seen come from the SEC suggests they're setting safety nets in place for the mother of all short squeezes or just a market crash, and then covering their arses afterwards when criticism comes their way about allowing it to get this messed up. We already recognise the problem and we've put safety solutions in place, so there's no need to worry. So until they're ready, they're going to look the other way at market manipulation coming from short hedge funds to keep this price down and delay the squeeze. Yes, it's annoying, and yes, it's unfair, but remember also, we're going to become very rich because of all this unfairness, and the system is broken, and once these fixes are in place, that won't be able to happen again. Because once their safety nets are in place, what reason would they have for letting this manipulation continue? The longer this goes on, the more margin debt, the more risk, which means the harder it will be to use these safety nets to protect the economy. Because at the end of the day, the longer they let this manipulation continue, the more money that BlackRock and Vanguard lose on their investments, which are the bigger investment funds. And also, the longer this goes on, the less money hedge funds will have to cover their shorts and synthetics, which means more money the DTCC will have to pay out to cover the squeeze. Interestingly enough, it also looks like mainstream media is starting to change their view on Robinhood. Robinhood Review 2021, an investing app to avoid, from Time magazine. The article talks about the large fines received by Robinhood, such as the $65 million fine in 2020 and the $70 million fine in June of 2021. It also touches on some key cons, being no retirement or tax savings accounts, it gamifies investing and trading, it lacks educational resources, it lacks some diversified investing products, and most importantly, they sell their order flow to corrupt market makers. And finally, I wanted to give a wider market update. In today's China developer news, Cynic has technically defaulted according to S&P. Casia Management cancels creditor meetings this week, and Evergrande's 30-day grace period could end as soon as Saturday. But interestingly, China's high-yield debt rates are spiking massively to highs of 20%. This is obviously reflecting the new risk in high-yield debt, but interestingly makes it more appealing for funds and institutions to invest or provide high-yield debt. Guys, be sure to let me know down in the comments below what you think about buying Bitcoin at $66,000 a coin, and also what you think about the AMC petition. And also, if you haven't already, be sure to sign up with Moomoo to get those free shares, because at the end of the day, everybody likes free money. And as always, guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.